The good news is the inflation is starting to come down. And so that is starting to show up in the data. I think we'll see it more around the world. We certainly see it in input costs in our companies where goods are basically flat year on year from a cost standpoint. We're seeing in the U.S. shelter costs or rental costs come down, their growth rates come down, which will be very helpful. It's the biggest component of CPI and core CPI in the U.S. And then in the labor markets, we're starting to see some softening there as well, where we're seeing wages, which were growing as high as 7+% a year ago, now growing around 4-ish% in our portfolio companies. So I think what we're going to see is inflation come down, which will allow central banks to pause, I think, fairly soon. But I do think on the flip side, they're going to hold rates at an elevated level. They don't want the experience of the 1970s where inflation came down, they cut rates, inflation surged again. And so I think they're likely to be more hawkish. That's certainly what they've been saying. And so I think we've got to expect that. The output from that will be likely an economic slowing. We've begun to see in the U.S. a bit of this, and I'd expect we'd see more. It's not 2008 or 9 in terms of imbalances, but I think you have to expect some moderation given the sharp increase in cost of capital.
A few years back, Blackstone's CEO, Steve Schwartzman, helped to play a role behind the scenes in bringing together the new NAFTA agreement. Jared Kushner, in his memoir, had described him as having a pivotal role in that process. Since then, we have seen growing tensions between countries like Canada and the U.S. and other countries around the world. China would be an obvious one. So getting that deal done in retrospect, how has that opened the door for a stronger performance, let's say, throughout North America in a world that might continue to change?
As you think about trade, getting that deal in particular done between the U.S. and Canada, I think was very helpful. Because if you think about investment, it's all about certainty. When you know, here's the economic framework, here's the trade framework, you're able to then deploy capital. And what we've seen around the world is when you have abrupt changes, when there are geopolitical tensions, invariably that makes businesses pull back. And the best environment is when there's policy around, certainty around policy, economic policy, trade policy, tax policy. Countries that migrate in that direction, particularly emerging market countries, attract more capital. You look at the turnaround in Greece over the last 5 or 6 years, it's been remarkable under the leadership of that government. And so we would encourage governments to find ways to encourage foreign direct investment, to encourage trade, and to have certainty of policy. I think we found that balance in the U.S. and Canada, and that certainly helped our activities here.